Hello and welcome to our daily market review and analysis. Thank you for joining me. It is Tuesday. We are looking at the euro currency pairs along with some of the other charts that we normally look at and possibly ones which we are stoking for potential trade setup. So let us begin with the market overview. And the chart first of all we are going to consult is the Dow Jones Industrial 30, and as we were outlining yesterday that for the time being, until we get more price action to tell us contrary, that we have started from the low in November as wave 1 and wave 2, and I think we've completed wave 3 and we are currently in a retracement mode for wave 4. And so if we then drop down to 4-hour chart, then from the potential high here, it looks like yesterday we did a first drop. Today market rose, but that was, I think, partial retracement of the drop, so therefore we could potentially label this one as an A, and then this one here as potentially B. And so at the very minimum we're expecting a wave C, probably something similar to the drop we already had over here or a little bit longer, to give us ABC movement, and then we expect another leg higher. Of course, if the top is actually in, then we may have this first drop is probably wave 1 and this one being wave 2, and then we'll have wave 3, 4 and 5, for example. Otherwise we're expecting this as a wave A, B and C, which would complete the minor correction of this entire rise from the low here back in 31st of December 2012, and we will be completing wave 3, wave 4 and then finally to go up for wave 5. So for the time being it would appear that the market would still continue to weaken. Of course this particular drop was quite severe, happened within a couple of days or a day or so, so we expect maybe a bit more selling, maybe not as steep as that, but a bit more selling. And it's Tuesday today, so we've already had 2 days of market action, so even tomorrow we might perhaps continue to trade up toward the upside for a potential retracement to complete and then another leg down. So probably on a Friday I suspect we'll finish up at the low of the week, and maybe that would be also the end of the correction, and then the following week we might be looking for moving up to complete that 5-way cycle. Then we look at the oil index. So on the oil we are still trading to the downside, although over the last couple of days we've probably moved more sideways. But I think if you look at this here and we assume that if this top is in here, then this is small a, b and c to give us wave A, B, C to give us wave B back, and we are now trying to form this wave C, and in that we've already got wave A, wave B, so we're just looking for finalizing that final leg, and that would then synchronize with the equity also coming down and both of them putting in the a low for market then to bounce back. So both equities suggesting weakness, even though equity may have a bit more upside to do in terms of the retracement, but then we expect another leg down. So equities, sideways to down to weaker, and then the oil also continuing to be weaker. So we'd expect the dollar index during that period to be somewhat stronger. So at the moment it of course has gone somewhat higher than we originally anticipated. However, as we explained yesterday, that we put a Fibonacci on this decline that we had from the high of July to the low September, then we have now almost approached the 61.8% retracement, and it's possible that we might even, if we really I think we should have a top within a fairly soon, but there appear to be a lot of weakness on the part of the Canadian dollar, to some extent also the yen recently, but more appropriately the euro, and this has all added to dollar index regaining a lot of strength. So if we assume that we are still in this expanded flat and that we are completing the 5-way move up, so once that is over, we still expect the dollar to roll over, and for the time being it has gone up to 61.8%. That could be perhaps an upper limit, or it might marginally breach that. And then when we have several other Fibonacci projections, for example, if we do a reverse projection of this one, so we do 100% of that will bring us to here, and then I think if we did 127%, so the 127% comes in just above the market price now, just above the 61.8% retracement of this entire decline. And then also this last one, now if we do the same, then we're getting 161% coming into that particular area. So all of these things are giving us some degree of confluence, in the sense that all these projections are lining up in a fairly close proximity. And therefore it's possible that we could get a potential turning point in that area. The only point that we observe is that on the daily chart we've got no real divergence, although the RSI looks like it is beginning to roll over, but on the 4-hour we do have a divergence. So maybe what we should have is a small pullback and another final leg up that then complete the 5-wave cycle and also provide us with a potential divergence. So this wave here, now I have modified it a little bit in light of what has happened so far. So let me just explain. From the low here we had on the 1st of February, this first one is a wave 1, this one is a wave 2, and I think we've now got a wave 3 top, and that is with a minor 1, minor 2, minor 3, an expanded flat A, B and C to give us minor 4, and then minor 5, which I think is now in place. And the actual waves in this particular section do not appear to be very, very clear, but this here, this complete drive there is a wave 3. Then we got expanded flat in the sense of A, B, C to give us A, B, C to give us B, and then finally C. So it's like an expanded triangle to give us C. So that gives us the wave 4, minor wave 4, and then this upthrust is the minor wave 5. So that has then given us, I believe, this wave 3 completion. And so now what we seem to be in a progress of is potentially wave 4, and it looks like it started off with some kind of a megaphone pattern. And I'm having difficulty even on 1-hour chart to actually put a clear label on, but it's possible that we've got a wave A here, then we've got A, B and C. So it's given us wave A and B, so we should decline. So dollar index could decline tomorrow or part of the day, form a low, which would be wave 4, and then once that wave 4 is complete, we will then go for a final wave 5. And as I say, in this particular area we have 61.8% retracement of the entire drop from July to September. Then we also have this particular leg extended 161%, and likewise the 127% is an extension of this leg. Okay, so they're both coming into the same area. And then also to add is, if I was to project this first leg from wave 2, then this you can see in a green line here, that's about double. So this leg here projected from here, we get 100% up to there and 200% comes into that area. So I'm still expecting potentially in that area that we should form a top. Now at the moment on a 4-hour we do have a divergence, but not on the daily. So if we were possibly on a daily to maybe for a day sort of come back down and then drive up higher, so tomorrow being Wednesday, so maybe Wednesday the dollar index could be weak, and that will allow RSI to drop down a little bit, and then maybe Thursday, Friday it could make another move higher, but then providing us with the RSI divergence that we are looking for on the daily. But most certainly in the 4-hour we do have and it might still play out as a potential divergence. One other point to remember is that we have gone higher than we were expecting. So what I've done now is I've connected this high. Okay, so this is the high of on a weekly chart, high on 16th of November 2008, and then this lower high on 6th of June 2010, and then drawing the trend line, also then putting the parallel line here on this intermediate high we had, which is on the 1st of March 2009. We seem to come with that line coming in very, very closely to the high we had in July. So we are approaching that particular trend line again. As you can see that it's not quite there, but if this leg was to continue substantially higher, then that's another line to look into. However, based on the Fibonacci and the fact that we have now almost completed this wave 3 and it's only the final leg drive up, then I think we are fairly close to top being formed. And after that, of course, we are expecting the market to at least come back and retest the low here, and maybe perhaps then continue to the downside. I'm not really sure. There are a lot of things happening at the moment in terms of the currency market, where each country's central bank, and i.e. the Bank of England, and then we've got ECB, for example, and the Japanese Finance Ministry, all in some way or another trying to address a possible currency valuation. And in fact, I think yesterday even the Australian Finance Minister, or Australian Central Bank made a comment about, I think it was Prime Minister, or anyway, one of those government official made a noise about Australian dollar not particularly being too highly valued, but if they felt it was, then they would do what is necessary to try and address that. So it looks like everybody's doing this, and in that process sometimes I don't know, it's not often very clear exactly what the waves are doing, and therefore rather than getting a clear momentum wave 1, 2 and 3 with the relative resistance, what we find is that often we finish up with a wave A and B and C and W and X and that kind of waves. So if I was to just look at this dollar index on a weekly chart, I mean, there are charts where I've labeled this one as potential A, then we've got this as A, B and C to give us wave B, and then this one coming back up to give us wave C, and then we were looking for most likely an action to the downside. But also what we could have in here is some kind of a strange looking triangle. So this one could be wave A, B, C, D, and then we are trying to now finish up wave E, and the wave E is also in the form of A, B and C. So a little bit unclear, but nevertheless the conclusion of whatever these waves are is that once this triangular part is finished, or on the daily we have been saying that this was a fairly strong motive wave to the downside, to call it a wave A, then we are correcting A, B and C is the flat correction, and so the conclusion is that both of these have the same outcome, and that we expect the dollar index to at least come back and retest the low here and most likely make another lower low. So we might finish with AB equals CD leg, taking us to possibly as low as 76. So I think the dollar index will weaken, but at the moment it seems to be continuing higher, and therefore we have to keep that in mind. But based on the wave count, it is almost coming to an end, and we should be expecting most likely top to be formed. So in that interim, dollar index over the next day or so might weaken, but then going into Thursday, Friday may actually put in a high, and other currency pairs, that is dollar currency pairs or any dollar denominated assets, would in the meantime continue to weaken or decline. So we were going to look at the euro pairs, so let us switch on to that one. And the euro recently have been quite weak, and consequence of that is that some of these charts that we are looking for are actually taking longer to congest or to complete the correction or a sideways congestion. So first chart we're looking at is the euro pound. We looked at it yesterday and we concluded that we've had this 5-wave cycle complete here, and the final wave was wave 1, wave 2, wave 3, wave 4 and wave 5, like an expanding megaphone pattern. So subsequently we've had a very strong move to the downside, which was a minor ABC, as you can see here on an hourly chart, is the A, B and C. It looks like we are trying to retrace A, B and C back, and that could probably happen tomorrow if the euro found some traction. Then it is possible that the euro would gain from here, and we are looking for basically an ABC kind of a zigzag leg to the upside. So let me just complete that. Okay, so what we are looking for now that we have the bottom in, yesterday we didn't quite have a bottom in, but now that we have the bottom in, we could quite easily put a Fibonacci on there, and you can see, for example, that if it retraces 38% or 50%, maybe even close the gap. Well, mind you, is not really relevant because the gap was closed from the other side, so we gapped up, market came down, so we did close the gap. But I'm just saying in terms of a structure is that if we get 38% retracement or maybe 50% retracement, that would complete this A, B and C up. So I'm expecting this leg to retrace to something like that over there, and then once that's complete, then we expect downward this wave C to commence. And because this is the 5-wave cycle complete, so in reality, so we got wave 1, wave 2, 3, 4 and 5. So because the complete 5-wave cycle is over, what we now expect is a retracement of the entire cycle, and we are suggesting that we at least look for 38% retracement. So euro pound may probably weaken to about 84 area, and it will do that probably in ABC ABC correction. So at the moment we've already had a wave A, and what we might find is that wave A down, ABC retracement up to give us a small wave B, and then drop down for a wave C, and then that will give us a one complete zigzag, and then of course we'll expect another retracement, another leg down. So in some form, either a single or double zigzag, we're expecting this euro pound to drop, if it retraced 38% to 84, or maybe if it didn't and only came to about 23%, then of course somewhere in the region of 85-50 area. Okay, so the two possible levels. The ideal would be is that it drops to 83%, because then it will fall in line with the rising trend line support and also the fib retracement lining up to expect now. That would give us a one complete 5-wave cycle, ABC down for either a wave. If this is 1, then this might be 2. If this is A, then that might be wave B, and then we'll be looking for euro to resume the momentum to the upside. So for the time being, we're expecting euro to be weak, and in that instance we will probably find euro will not give us the trade we were looking for that easily. Having said that, you see, for example, this particular currency is the euro CAD. We were looking to stoke a long entry on a euro CAD, and we might have managed to get in not knowing whether this is going to continue or not, because we had this leading diagonal. So leading diagonal means that there's going to be one following. So when we had a retracement, if we did manage to get entry into 134, then we've had a 150 200 pip potential upside. But then of course we never cleared properly the declining trend line, so we've fallen back down again. So now if you look at it on a daily chart, I think what we've got here now is probably we'll have to modify the labeling somehow. So this one is number 1, this is 2, and I was also thinking that this one of the next degree was 1 and 2, but you can see here now it looks more and more like a triangle, and the triangle normally happens in a wave 4 or a wave B. So I'm not absolutely sure. However, if this is 1, this is 2, then we could possibly consider this one as being wave 3. Actually, I'll just put them in a normal number now if that's the case. So this one here is wave 1, this one here is a 2, and then we had a 5-wave up to give us wave 3, and currently here you can see is potentially forming a triangle. So if that triangle turns out to be correct, then what we will have is this one being the bottom of wave 4, and then we would move up to form a wave 5, and wave 5, depending on how it comes out, let's put it this way, it cannot be longer than wave 3, because wave 3 at the moment looks like the shortest. So we can't have wave 3 shortest in the Elliott wave. So the only way that would happen is once we break out, we get a wave 4 completion, and then wave 5 turns out to be smaller than the wave 3. So then we got smaller wave 3 and even smaller wave 5. Okay, so in that respect, we are looking for wave 5 probably to achieve somewhere about 140 on a euro CAD. But exactly when will it line up? So looking at that now on this 4-hour chart, on the 4-hour chart we do have, you can see each time the price comes down to the lower end, it comes down into the rising minor trend line on the RSI. And the same thing on the price is that each time the price comes down, it hits this rising trend line support, comes back down, it's again the same. So I think what we've got here is we've had this A, B and C first zigzag, so we call that wave A. Then we had this rising wedge as a minor A, minor B and minor C, so we go wave B, and then we've got wave C here. So I think we are probably very, very close, if not at the bottom for wave 4. If we were to look at the last leg, that's this last leg, so we drop down to the hourly, and you can see on the last leg it doesn't really cleanly divide, but we got A here, then you got B and C. So either that ABC actually formed the final bottom, or we might find that we've got ABC to give us a minor A, ABC back to give us minor B, and then we are now coming down or will do to form the final low. So basically what I'm saying is that if there is going to be a qualifying trade on this one, then either entry can be in there now or anywhere along here without sort of being too far away from this low. So if we get another low, then of course that will be ideal, back to the trend line. But if it doesn't, then the only other thing that can happen sometime, we begin to race away from us. So if it races away from us, we don't want to chase it up too far because the risk will increase. But if we can manage to get long somewhere around 134 to 134.10, then maybe we can have somewhere in the region of about 60-70 pip stop loss for the first low, and if you put it behind this other low, then we're talking about 90 pip stop loss. So 90 pip is okay, and it's a triangle. So what might happen is that we may, if the triangle is not complete, in other words, if this is A, this is B, this one forms C, then often what might happen in a triangle is we'll get like this, and then final leg down before completing the triangle. So what we get is really stretching it out. So we got wave A, ABC up there to give us B, ABC down to give us wave C, then ABC up to give us D, and then coming down for E. And I think it may actually turn out like that because the euro is weak at the moment. So if the euro is weak, it cannot make a clean break, and so I think we might get a bit more sideways congestion as we get this triangle developing. And once the triangle is complete, we should be able to then make the headroom, and of course by then the euro will probably start regaining its relative strength it has enjoyed so far from the July low on some of the other well, from July low really against the dollar in particular, and probably even against most of the other currencies. So Euro Canada, if you do enter long anywhere near the bottom end, then really you should be looking to take off most of the profit by the time you get to 135.50 area, because then I think we might get another leg down before going higher. So you can see now we might actually get a full ABCDE triangle, and it is looking much and much like a triangle, ABCD and E over here. So if you do go along here, then maybe take most of the profit off at 135.50 area, and then we may be able to retrace that one back. Okay, so when we come back to the bottom end again, rising trend line support, then that would be a proper long entry. So in the moment it might just turn out to be just a small you know, intraday or even a couple of days swing trade, but then basically trying to re-enter again at the lower end. So this might turn out to be a triangle, and if it does, it would be better because it will confirm our analysis, and then hopefully we should be able to catch the fifth leg going up. Euro CAD, so we look at the euro yen, and in the euro yen, like most of the other yen pairs, has stalled, and so far if we look at this one, then it would probably be like a wave 1 and wave 2 what we said originally, and then we had wave 1 in parentheses, wave 2 in parentheses in Roman numerals, and this is wave 3, so we are currently retracing in wave 4. And previously we estimated that we'll get a shallow retracement, and if that happens we should be able to find a possible bottom around 121 area. We have dropped and made a low a little bit below that to 119, but if you look at the 4-hour chart in between, then it would possibly be this. It would wave A down, then here this one is quite likely to be wave B. So you got wave A here, then you got A, B and C to give us wave B, and then this one is C. So it's possible that we may already have a bottom in A, B and C, but on the basis that euro is at the moment relatively weak, this particular down leg may not be over, because this one here, I think wave 1 is a 5-wave move. So after this one we should expect a 5-wave move. So far I'm not sure whether we've had a 5-wave move in there. You see, if you look at this now, we probably got 1, 2, 3. This here is a 4. So in other words, we should see another lower low formed. This one here could well be a potential triangle. So if that's a triangle, then that triangle normally comes in a wave 4 or a wave B, and I believe that it is probably wave 4. And on the resolution of that one, we should see one more drive to the downside. Okay, so then on terms of the Fibonacci, we'll be approaching close to 23%, and that could well form a bottom in that area. And then the yen pair, at least the euro, may find a bottom, and it will probably start bouncing to complete, because this will be wave 3 in bracket. So we should be coming down here for wave 4 in bracket. Wave 4 in bracket, and then we'll go up again in wave 5, like so. Okay, so the yen still has some more room to the upside. Once we finish this one, it will move up, probably some 5-wave movement to the upside. I think we've got too many lines here. Let's take these away. Okay, so once we finish this wave 4, then we'll go up there for wave 5, but currently still coming down. So euro yen still go further downside, and then we can look at the euro New Zealand. And like the euro Canada, this pair also is moving more and more to the sideways. Now we said that we could look at this pair as a way of helping us to time our entry in other currency, euro currency pair, not necessarily trading euro New Zealand, although it's possible if you want to trade euro New Zealand. On the horizontal side here, we had a lot of support in that area, and we are coming back into that area. Don't know whether we'll make it, but we have this minor rising trend channel, and at the moment we have just bumped up from the bottom of that trend channel, but euro is currently weak, and therefore we may even travel more sideways, and in which case, after having done wave 1, wave 2, it may be that we've got this minor one, and then we're going into a very big flat correction. So we'll finish up with the wave A, B, and C, and the wave C still got some more room to the left. So no specific trade setup on the euro New Zealand, but we should be able to find the euro New Zealand come toward the bottom end by the time our trade in euro Aussie, for example, or euro CAD turns up, sort of lines up. Euro Aussie is still the better currency pair for euro to capitalize on euro relative strength, but at the moment, even on this currency pair, we seem to be moving sideways. But on a daily chart, we have a rising trend line which connects the low and the next higher low. So you've got a potential support zone coming in, and the euro CAD's got the same kind of a structure, and euro pound also, but in the euro Aussie we have potentially broken out of this horizontal level of resistance. We've come back into it, and we've got a 100-period moving average on a day, so that one is coming into the line at the same time. If we also put Fibonacci of this leg, this last leg up, we're coming into the 61.8% in that area, and then horizontally we have a reason to believe that to be a potential area of support, because here we had resistance, and then the whole entire area here I think is slightly higher where we have a resistance, but here on the left here we have a potential area of support again. So I think in this area we could expect something, although on the daily chart in this particular cycle we've got no divergence, but we've got an uptrend. If you look at the 4-hour, then on the 4-hour you can see we do have a divergence. So it's quite possible we may be putting a bottom in Euro Aussie, and if you did want to consider going long on a Euro Aussie, then at the moment I think it is an ideal opportunity, on the understanding that if the trade did not work out, we would definitely have a stop loss which would not be too painful for the account. So at the moment, for example, where the current Euro Aussie price is at 1.2773 area, so if you entered long in that area, then you put your stop maybe just below this rising trend line on the RSI, so probably something like it would have to be about 150 pip away. If you keep it just below that low is 135, so I think 150 to 160 pip away initially. So if you find that you can't enter a trade with that size of stop loss, then of course you'd have to find another way of entering, and that means, for example, if we did have another low, then that would reduce the stop loss eventually. But even once you have a low, you might say that these lows we had here, if you fall below that and you also fall below the trend line, then potentially you're out, but still I think the 120 pip or so possible stop loss is going to be a reasonable size stop loss. I think there's no two way about it, but the potential to the upside, if this one actually is the bottom and we are able to catch that, then we may have this 1 and 2 and again 1 and 2, and then we should be expecting a strong leg to the upside. Of course, the alternate way of entering would be is that you find if this price take out this previous pivot high, then you enter by a stop buy entry with a stop loss being just below the low here, and even then we're talking about 120, 130 pip maybe, and I think there is nothing else we can do. The only other thing we can do is if we keep it on a 4-hour or 1-hour chart, and you see that this one is making higher high and higher low, so ideally you want to enter on a retracement, not necessarily at the top, because that could then get you into the trade and then we have a retracement. So that is not such an ideal way of entering, but here you see we can just about make it that after the strong leg down we got A, B and C up, and we're probably doing another A, B and C down here, so we may well be able to enter this at a lower level, and lower level meaning probably in the region of something like 127 area. And now that would be brilliant, because 127 area, then your stop is only about 60-70 pip potential. So there is a potential long entry in this vicinity. It's just a question of finding how to enter and to keep your position small in the beginning, to ensure that should it not turn out and should our analysis be completely wrong, which I doubt, but one would never know, we do have a reason to believe that horizontally we have an area of support just below. We also rising trend line support. We got 100 period moving average which acted as a potential support along this here, so we're coming back into the area. We should expect that to find a support, and then on a 4-hour, as we say, we have already started seeing a potential divergence on the RSI along with the lower lows on the price. So from that perspective, I think the entry is there. It's just a question of getting into the entry with acceptable stop loss and appropriate position size will allow you to maybe put up with some horizontal choppy move up and down sideways sort of thing for the next day or two. But otherwise we should be expecting Euro Aussie to start moving to the upside. So out of the whole lot, I think the Euro Aussie is probably quite a good pair to enter. I use Euro's potential relative strength against the Aussie or against the other currency pairs like New Zealand and Euro CAD, etc. The next euro pair is the euro dollar pair, and on a euro dollar pair, yesterday I explained that we will ignore all the in-between waves we previously said, whether is this or the other. At the moment we are looking at that complete swing as the capital wave A, then you got A, B, C down to give us capital wave B, and I think we've just completed capital wave C. So what we are now doing is retracing some of that. So if we put a Fibonacci on this entire leg up, it looks like we've bumped into the 38% retracement, and horizontally this area here, see, was a support back in 2012 in February of 2012. Market fell back once it broke below it, came back into the area, and whilst we don't have an exact line, but it found resistance in that area. So we have now reapproached the same zone basically, and the zone we are talking about essentially is this here, right? So in that area we had lots of support, we had resistance in that area, we bounced on that area, we've come back into that area. So I'm still expecting, at least for short while, that there will be interim support. What will we do after that to some extent would depend on other currency pairs, and in particular dollar index. If it begins to form a final top, then we may be here close to putting bottom. And so if we look at it on a 4-hour chart, then so far we've got like a double zigzag. The first zigzag got this W, X, Y, X and Z to give us the wave A. Then we got ABC back up to give us wave B. And I think because we had this 5 wave down, we should be expecting the same over here. Now what will happen over here is that between now and probably tomorrow, we said that the dollar index will retrace to the downside, and that would line up with the euro possibly making another small bounce. That small bounce will probably come into an area of around 130, 170 or 132 somewhere, and from there it will probably have one more drive, because we got one over here. We had a 5 swings, although I put letters on, we got a swing 1, 2, 3, 4 and 5. Okay, so here we need 1, 2, 3, I think almost done. If it bounces, we'll get a 4 and then one more drive to complete to wave 5. So we will get another zigzag. Equally, what we might have here is possibly some sort of falling wedge pattern. Don't know exactly where to put this one. It would depend on where the euro bounces to. So if it, for example, bounces to something like that, okay, so we got 1, 2, 3, 4 and 5. So we don't get dramatically lower than the current low, but we might also get a potential falling wedge. So that's like an ending diagonal. If we do see that, then of course we would have a higher confidence that we haven't bottom and will be now making our way to the upside, and in which case we had this A, B and C zigzag. So if we form a bottom there, we could actually do another A, B, C to the upside. Failing that, we may do a bit more complex. After forming this low, we might do ABC back up to halfway, and then maybe having another leg down before eventually going up. So not a great clear chart at the moment. if we just simply look at the basic technical rather than the Elliott wave and everything, then so far we've come back into the area of 30. So if the RSI bounces on a 30, there's a good chance that we'll get at least a small bounce. But if we do fall, we don't hold and we fall below 30, then I think the euro is very vulnerable and it could actually have a lot more downside than we might be willing to consider at this moment in time. At the moment, I am looking for a potential bottom in that area. In 4-hour chart, we have a clear divergence currently forming here. So from that perspective, I'm still expecting a low. So what I'm on this 4-hour chart, I'm expecting a bounce, then another low. Okay, so in some way that probably will be over by tomorrow, I suspect. I don't think it will go much beyond tomorrow into Thursday sort of thing, and then euro could begin to bounce. Or even here we might not get what we're looking for, in which case we might get a, like we had here, 5 wave down, so wave B, and then we are into wave C, and in a wave C we might get like a double zigzag, a little bit like, say we got a 5 wave down, so 1 2 3 4 5 to form wave A, ABC back up, and then another leg down. So we might get something like this, something like that. So we might, once this is complete, we get a zigzag down, we get a retracement, and then we come down with another lower low eventually, and then price is picking up to go higher. So we might get like a double or a triple bottom. I think this area is very important, 130 area, and just maybe a little bit below 130 is very important. If we do give up that and the euro don't hold, either through whatever political event that are taking place, then it's possible that the euro is in very vulnerable state. However, because these are 5 wave to the downside and it is very overlapping, I do not think in reality that this is actually a new downtrend. It is a downtrend in the sense of, on this 4-hour chart we have a clear downtrend channel, but it's not a new downtrend which would eventually take out this low we had back in November and then subsequently retest the July low. So it's not in a new downtrend in that particular way. I think it is still very corrective, and in that corrective nature we've got this first wave which doesn't conform to like a falling wedge leading diagonal, but nevertheless we've got waves that are very overlapping. So I think it is a correction of the move we had up. So we should expect, once the correction is over, that the market will revert back to its main trend that started back in July 2012. So in a shorter term, we are expecting a small bounce and then maybe a more weakness, but 130 approximately to hold. Or we might get a sideways bounce and sideways correction until we find that the dollar tops out, like on a Friday. Okay, so sideways to downside bias on euro. And then similarly, if we look at the pound, then on a pound here, we said that on a weekend when we had that gap down open, I think formed the low, and that low so far for a pound has held. It's too early, it's only Monday and Tuesday complete, so we don't know whether that would be the case, say, in the next 2-3 days, but at the moment we seem to be holding this low, and we had this rising wedge pattern. So rising wedge can be A or it could be 1, and then currently retracing for B or 2. So potentially this one here is wave 1 or A. and then we'll get the same here, corresponding wave 2 or B. And if you see this one here is a leading diagonal, then in comparison this retracement, you can tell, is definitely a correction. It's not a new reverting back to the downtrend, in other words. So longer term the price been coming down, and this is just a retracement and continue down in that general downward direction. So the overlapping waves tend to suggest that it is correcting something, and logic would tell us that that is correcting this rise here. So that minor rise is potential wave 1. It would help if I typed it correctly. So wave 1 or an A, then we've got like triple ABC X ABC. So we should see a bottom forming on the dollar pound probably tomorrow, approximately in the current area, which is 61.8% retracement of this entire piece here, bouncing from the low upon the gap down open. So this will be wave 2, and then we should be reverting to the upside with a at least an intermediate uptrend, if not the main trend to the downside. So if you look at it in a 4 hour, then you'll see we've got a bottom. We should also now, once the price begin to move out, we should be able to notice that it's now or will be going through this downtrending trend channel with the upper resistance line. And then of course if the pound breaks up, we are looking for pound at least as a minimum to come back into this area. First of all, it will come up and maybe say around 154 area, possible area of support, maybe resistance of 154, and if you get through that one, then the next area would be in the region of 156.50 area, because there we had 56.50 as a support. Here it's saddle on both sides. We would expect that to become a resistance, but I am really hoping that if the overall wave count is correct, then we'll be looking for a lot more room to the upside. But for the time being, we would remain cautious and expect only a bounce to 156 to, well, 154 initially, and then 156 area. So, and if the pound gains that strength, then you can imagine what pound will be doing against the euro, pound euro, in a sense that euro will be weakening, so we'll be seeing some more downside on euro pound. Okay, and then finally on the Canadian dollar. Now Canadian dollar, a little bit like the dollar index, it's not absolutely sure now that we have risen up so much to see what would be the best wave count. However, a couple of things to note is that since the July high, we have retraced and we've gone back into 78.6% retracement. And then in the shorter term, if we look at this being a zigzag from the low of September, then the first leg was zigzag, ABC retracement. We should be expecting a zigzag again, and in that zigzag we've had a wave A, wave B, and we are looking for wave C, where we've got 1, 2, possibly 3 in place, small retracement wave 4, and then we should be able to go one more high, and probably by Friday we might actually have that complete. So dollar Canada can probably go up to 1.0350. On daily chart we've got no divergence. On a 4 hour you can see we have an early divergence, i.e. from the last high here to the current high, and then also we have a divergence in the current price action here within this narrow defined rising trend line. So Canadian dollar could perhaps make a small retracement and then weaken some more toward the end of the week, and probably we might get a top forming on a dollar Canada. And longer term, dollar Canada is a little bit picture is a little bit unclear, because ideally, depending on how the dollar index develop, and I think dollar index will eventually move down to form a new low. Again, for Canada, I am not sure the dollar will actually form a new low, or the current low is in place already back in November 2007. November 2007, I think, was a partial retracement of the substantial decline we had over here, but that was like WXYXZ, so the down move was completely over, and we could say that we have retraced that one and we've started a new leg down. So if we start a new leg down, then this one here was an ABC, then we've had ABC and a final 5-wave move to the downside. This triangle is a wave B. So really what we might have is possibly for a dollar Canada, it may well have a bottom in 2007, and then you can see that we have either a possible triangle or sideways correction, and we might move higher. My original thought were that it would follow the dollar index, and that is the dollar index will top out and form a new low. Now that is still a feasibility in this one, because once we retrace, we went for a capital A, capital B, and it may be forming capital C, and in that capital C we have quite possibly here A, B and C, X, 5-wave down as an A. So let me just expand that. So here we had A, B and C, X, A, B, and then 5-wave to the downside to form a C. Then that could be 5-wave to the downside to give us A, B and C, and then we expect that to come down, or we have this as a potential triangle, in which case we go like A, B, C, D and E to the bottom of the triangle and then raise up. So that could be one possibility for dollar Canada, is that it would drop down to rising minor trend line in the area of 0.9750, and then we could really explode to the upside. So that's one possibility. And the other possibility is that it's not really a triangle, it's probably only a triangle if you connect up this here, this sort of thing. So in that we've got like a wave A, then we're in a triangle. So once the triangle is finished, it should break to the downside if it is only partial triangle. If it's a triangle for the whole encompassing price, then it might put a bottom and then rocket up, which means that Canadian dollar is very, very weak. Or that along here, this could develop into a triangle, like we said, into a Euro-Aussie triangle. So if this forms a triangle, then in what direction or which direction we should go? Normally triangle is a wave B or a wave 4. So this one is definitely not a wave 4. So then I would say it's more likely to be a B. If it is a B, then there should be a wave C down. So wave C can stop to this rising trend line support, or maybe come down even deeper. Okay, so for this one we could say that we have possibly bottom forming in this area, or we might finish up coming down like that. So what it would then paint out is we've got wave A, wave B and wave C top, and in which case we follow this route here. Or we have a potential triangle where we've got A, B, C, D, wave A, then go A, B, C down to the wave B, then currently into wave C. It would drop down to the bottom end and then go up higher. So two possible scenarios, and we won't really know which one it is until we have a bit more price action. So in here I'm now expecting this one to end in a fairly close proximity. Is that we've got this wave A, wave B, and then zigzag wave A, ABC back as wave B, then go wave A, wave B, and that one C, where we have 1, 2, current high 3, small retracement 4, and then 5. So the dollar index is looking to do the same, as well as the dollar Canada is that pull back a little bit and then one more drive to finish off the current cycle. So that's the dollar Canada. So I think we've covered most of the currency pairs. I'm still having problem with the internet cutting out. The engineers are calling in tomorrow to find out whether something wrong with the equipment or some fault along the internet cabling. So I won't know about that just yet, but nevertheless I should know tomorrow, and hopefully they will rectify that, and then we should be able to enjoy good internet connection. Otherwise it would be a bit annoying. But anyway, this recording that I've done just now, I will post it out as soon as it's uploaded, and hope you'll be able to find something out of this. Oh, there was very quickly, if I could just remember, go over onto the pound pair, and in the pound pair we are looking for potential long entry in pound Canada. So you can see that we had this what looks like to be an ending diagonal on a 4-hour chart, drop down onto an hourly chart, and then in an hourly chart it is possible that we've got 5 wave up, minor 1, minor 2, 3, 4, and 5. We are retracing. So once the retracement is over, we should be able to start making progress to the upside. And we were looking for ABC retracement, so it looks like so far after 5 you had a wave A, we probably had a wave B, and we are now making a leg to the downside, in which case we've got 1, 2, 3, 4, and 5. So I think we may owe ABC, and in which case either the bottom is in or will be in very shortly, like so for example, and then we should really be making a leg room to the upside. So in that context, if you look at it on an hourly chart basis, and you put a Fibonacci on there, then so far we have retraced into 50%. If we get a bit more retracement, we'll get something like into 54.75 area, 54.80 area, where we could expect a potential bottom to form with a view of going long on the pound dollar. If you felt, or pound Canada rather, if you felt that you wanted to trade this one to the upside, then which case, depending on where you get your fill, either at current level, in which case your stop will be 120 pips or so away. If you're able to get prices come down a bit more, then your stop might be somewhere in the region of 90 pips or so. So I think still good risk reward ratio for potential long entry, but it needs to be decided on what time frame you're going to enter. I think potential entry is almost now. If not, then if you get another lower low, then we enter at a little bit lower level. Otherwise, current area approximately would probably be a good area to enter long. And then similarly, we had a pound New Zealand. Also done its leg up. Can't really count the waves very easily. 1, 2, maybe 1, 2, this one 3, 4, and then this very strange kind of looking wave 5 is got a lot of overlapping waves in them. So if you can't count the Elliott waves on that one very clearly, then what we do expect is the Fibonacci ratio of applied, we should get a retracement back into there at around 1.82 area, or a little bit lower down, maybe like a 1.8180 area. Then we may either trade sideways for a little while or form a bottom and start rising with a potential inverted head and shoulder that I explained yesterday. And then in the same way, the pound Aussie is perhaps a better currency paired because that also had a 5 wave up as a leading diagonal. We're expecting ABC to the downside and then potential long entry at 147 or so, 147.80 approximately, with a view of then entering long position on pound Aussie. Okay, so those are the trade we are looking for. Hopefully, as I think probably soon, within a day or two, or maybe by back end of this week, it should line up. So hopefully next week will be a good trading week for us. So anyway, hope you enjoyed this. Wish you well, and be sensible in terms of your position sizing, because often at a major turning points, it's not possible to get an absolute bottom, and so there is a potential risk involved because we keep our stop loss a bit further away, not to get prematurely stopped out, and in consequence the relative risk is there also. So your position size should be such that you don't suffer a large loss. Anyway, thank you very much. I look forward to you joining me again tomorrow, and we'll be able to go through, tomorrow being Wednesday, we'll be able to go through the yen pairs. Okay, as usual, any question or any comment, please feel free to send in an email or a Skype, and other than that, I look forward to you joining me tomorrow.